This week on The Capitalist Investor, we're going to talk about what has happened over the last week, which was a complete market meltdown of 12%, the cause of that, aka tariffs, and kind of recap our Zoom call or Zoom meeting that we did for all of our clients just the other day. And also we're going to touch base on the Masters, a tradition like none other. Derek and I will have some picks for that.
All right, well, welcome to The Capitalist Investor. You got myself, Diamond Hands D. We got Tony the Tiger.
Yeah,
How you doing, buddy?
Doing good, man.
Yeah, it's been a rough week, to say the least.
The markets and the Masters.
Yeah.
Woof. A lot going on this week.
Yeah, for sure,
Yeah.
for sure.
So yeah, the market has melted down in the last 5 days. So even before, the market is down like 16% year to date. And the market essentially priced in an 8% tariff. They already discounted the tariff because yesterday we did a company-wide Zoom for all of our clients and friends, and we talked a lot about how tariffs were already cooked in. But then when you got President Trump coming out a lot more hawkish than a lot of people would have expected. He brought out, I think they called it the board of death. Yeah, he was standing at the podium with this big board of like what the tariffs are going to be. Like, oh my God, dude.
With math that no one really understood.
Yeah. So no one priced in the hawkish tone and the board of death and all this other stuff. So that's why the market's selling off. Like he slapped a tariff on everybody. And since then, again, a day feels like a week because of just social media these days. Everyone gets instantaneous news, right? And if you really want to, you can get instantaneous news all day long and really fry your brain. And I think every day that goes by, it is just feels like weeks at this point. So Derek, what's your take right this second?
Yeah, so it's I'd say high level. And we talked about it last week. I think what is going on in general is a good thing. I think we are, in kind of what I think Canada, Mexico, Europe, Taiwan, Indonesia. I think the 0 to 0, reciprocal tariffs, free trade, I think that's going to get done. I think everyone's main concern right now is kind of twofold. China. So, basically we hit them with more tariffs. They're up to 104%, I want to say.
Yeah, they came back this morning with even more on us. So, I mean, honestly, it is essentially going to be United States versus China.
Yep, I think that's what we're taking focus on.
And I don't know if you caught it this morning, but Jamie Dimon was on Mornings with Maria. And funny you bring that up, like the Mexico and Canada thing. He goes, think about like China and who they're surrounded by, like their territory. Like they're not friends really. They might be kind of colleagues because they're neighbors, but here in the United States, Jamie Dimon kind of put it a nice way. Like, we're actually blessed to have two partners in Mexico and Canada that we're not, too contentious with at all.
Right.
We vacation there constantly. We go to Canada, United States, they'll go to Canada. They'll go down to Mexico. Like, it's pretty friendly.
Canadian side of the falls,
Yeah.
Beautiful.
Right. So this whole thing with China is going to really, it's escalating, right?
Mm-hmm.
I'll touch a little bit on that later because as of this morning, again, another development, the 10-year Treasury is the yield is ballooning.
That was the second thing I was going to say there.
Yeah.
Yeah.
So what that means is somebody's selling is what it means.
Yep.
So we're going to talk a little bit about that. But the one thing I do want to talk about, so on our Zoom yesterday, Mark kind of laid out a kind of a base, like 3 base cases.
Mm-hmm.
The first base case, it's a short-term tariff, right? Like this is going to be over in days or weeks.
Right.
Like something something's going to get so frazzled it's going to be over. Well, they already have 70 plus countries trying to come to the table to negotiate. And I think they mentioned, like, Donald Trump's not like, hey, you're ready to negotiate, I'm going to strip that tariff away. He's not going to do that until there is something set in stone. He's not giving anyone a free pass until things are inked, right? So that's good, but that could take weeks, right? So
or longer.
It could. and again, every day feels like a week in this market, get ready for volatility. So, on the short term, things are solved and these tariffs go away. It creates free trade, and we're able to sell our stuff across to everyone else, which is what we want, right? We're realizing short-term pain and but for long-term growth. Right. And again, that is us actually exporting and people buying stuff from us and manufacturing jobs.
Right.
Getting a revitalization here in the United States. The second one is a permanent move. And that might be just longer than 6 months. Right. It's like, hey, we got some countries inked up, but we don't have some others. We're waiting for them to come with a better deal, whatever that might look or sound like. Again, I think as companies or countries start inking deals, like you're going to see these spikes in the market, right? So it makes me, it just, I think with that premise, and which I think this is probably the base case is like a semi-permanent, like things are going to get inked up as things come through, is that I really feel that every one that comes is going to be a pop to the market, like a positive pop, right? So I feel like we're going to get back to even a little bit sooner than a traditional bear market does. And I got some stats on that too. And one is then a permanent. Well, good thing is it's meant for long-term growth. Bring all, get our items that we are exporting, like get them on an even playing field, right? But it's going to be very the way he rolled out these tariffs is very shock and awe, and the market's still trying to absorb that.
Yep.
Right. And that's so funny. So funny thing is, I met with a client yesterday and we were talking about all this stuff, and she goes, I just bought something on Amazon that I always buy. It's like on the automatic monthly whatever. And this time when it went through, they said, hey, expected deliveries 3 weeks to 3 months. It's out till like June. Like there's this huge window. Can you imagine somebody like Amazon who they're selling something for $20 now and next week it's 26 because it's coming from China, or maybe, well, if it's 20, it might be 40, right? Then just to have it reverted a week later, like all the returns, like, hey, I bought this, I'm returning it to get my money back so I can rebuy it for like, can you imagine the pickle they're in? Like, holy cow. But I digress on that.
Derek, I mean, even just scrolling Instagram, even watches, I follow some watch people, they don't know what to do. They don't know what's going to happen. I think Switzerland had like a 31% tariff. So, regardless of the industry, you see people pulling forward purchases. I don't know if it's true. I heard Apple flew in like 5 plane loads full of iPhones into the United States yesterday. So yeah, that's what is making everyone nervous, is the uncertainty. And whether you hate Trump or you love Trump, he's not doing anything to quell those fears that people have. I think that was perfectly evident on Monday. I think it was Monday when Netanyahu was in from Israel, and basically, they had a press conference, and he's like, I want to lead the way with these 0% tariffs, free trade. And they asked Trump, if that's gonna be good enough to lift the tariffs, and he basically said no. So I think that is another layer that I don't think a lot of people are talking about. It's what Trump is ultimately trying to do is completely resets the trade market, and that's both short term and long term. So even if he gets, these 0% reciprocal tariffs, we talked about this a little bit last week. The 10% baseline tariff seems like it may stay in place no matter what. So that is a curious policy move there, because I think that will add to inflation. And that's not really the spirit of what everyone thought was going to happen. It's like, hey, there's unfair trade. You be zero, we be zero, we have free trade. And the U.S., benefits from that and hopefully brings back manufacturing jobs, all that good stuff.
Yeah.
I don't know what is going to happen long term if those 10% baseline tariffs stay in.
Yeah. I mean, it's inflationary, but not as much as 100% tariffs.
Yeah.
So there was a couple, I'm a big stat guy, I like numbers, obviously, as a former recovering engineer, but there's this index, and it's called the Policy Uncertain Index. What is going on right now, these tariffs? This is a policy uncertainty environment, because it's not a financial problem, it's a policy problem. So the financial crisis back in 08, 08, 09,
Yep.
That was a financial crisis. And when you take a look at the difference between a complete fundamental breakdown of the economy, like back then, right? There's big banks going out of business, big problems,
yes.
right? It was a 4 to 5 year recovery.
Yep.
In a policy correction, or a policy inflicted pain like we are right now, or COVID, there was a 33-day turnaround. We went down 30%. We had it mostly back within 30, 40 days.
Yeah, it was wild.
So, and that was positive for the year, right? It was down 30%. That means it ripped 50 after that, right? So, again, the day that these tariffs, there's a solution, or there's some level heads communicating, is the days you're going to want to be involved, right? The biggest days of the market are in the darkest days.
Yep.
The biggest upticks, I should say, are in the darkest days. They're usually 5 to 10% swings, right? So, but let's take a look at this. So there are concerns of recession fears. So we feel that we're getting close to the average bottom of a market drawdown. So without a recession, a typical bear market without a recession really happening is around 23%. If there is a recession, it's 27%. We are down year to date, or I'm sorry, not year to date, but we are down from the highs around 18% right now. So we're not really close to, we're close to a bear market, but we're not quite there yet. One bad headline and we would be probably. But we're not near these averages yet.
Yep.
Right. But those would be the averages, but we're close. So our investment team is saying that, hey, we feel we're very close to the bottom. And if we're not already there, okay, so that's another thing. And I talked about the recovery time for something like this is less than a year. It could be months, not years, right? So, because again, this is a self-inflicted, just like COVID, policy transition.
Yep.
Is what I'll kind of call it. Now, the other thing before we close up on this topic is, we talked about it before, China versus United States. The reciprocation is, the negative reciprocation on these tariffs is who's gonna buckle first, who's gonna flinch, and things like that. And I find it funny, again, I try to say that I look at the left and the right side of commentary, and immediately as soon as Trump came out with the tariffs, ironically and uncharacteristically, he shut up. He didn't say anything.
Very true.
Very, very, very muted compared to how unmuted he usually is.
Right.
And the left said he threw this out and no one called immediately or whatever. He's like, he's scared, right? And then the right's like, hey man, the first person to speak loses.
Yep.
You know, it's like this is a tactic. It's like, I'm just going to go over here. I laid out my plan. I'm just going to go shut up and wait till somebody else absorbs that and wants to talk first.
Yep.
And, you know, according to White House, there's 70 people, 70 countries lined up ready to negotiate. So I guess we'll find out. But I found that entertaining. But it's the China thing, man. Like, the reason this now, today, the 10-year Treasury is spiking. You know, that, again, that would make you believe that somebody's dumping our debt.
China.
And who owns most of our debt?
Yep.
China. So are they dumping our debt? Are they A, trying to hurt us financially, right? Or B, are they trying to save their own currency, sell our debt so that they can buy their currency? But then you also have like, hey, there's probably levered up funds that need to liquidate cash to do margin calls and all that fun stuff, because it's a weird dynamic and you can't really pin who's actually doing what.
Yep.
But I don't, it is definitely a move if they're trying to dump our debt. But they said another way for China to dig themselves out of this deficit is for them to quantitative ease. Then talking about printing
Massive quantitative
like $1
easing
trillion
there.
to $2 trillion. The problem with that, you thought we have a lot of debt. They don't have as much monetary debt, but when you look at their debt to GDP ratio, it's already 300%.
Yep.
We're at about 120, 125, I believe the United States is. They're at 300.
Right.
Strap on another $1 to $2 trillion and like sayonara, right? No pun intended.
Yep.
Right. So,
So it basically comes down to how much pain is Trump willing to go through to ultimately win, because you just perfectly laid out. We do have the leverage, but they can make it very, very painful.
Correct.
And we talked about it for weeks. Tony called it a conspiracy theory. I don't really think it is. But Trump wants lower rates, right? And the thought was, if there's a recession, they're going to have to cut rates. But rates are going up because China is dumping their debt and their bonds, and that's a big problem.
Now they're talking about how this is gonna, Jerome Powell said, we're fine. This is another chink in the armor for, again, what President Trump wants is to him have, the Fed start lowering rates. There was no emergency meeting last week, but there might be this time because of what's happening with the 10-year Treasury yields right now. So we'll find out. But in kind of closing, though, I've had several conversations with clients recently. Obviously, the last 5 days, things have escalated. And not every client's the same, right? Different portfolios, different strategies, different allocations to bonds and things like that. And believe it or not, I mean, the market's down 18%. Bonds are flat. The AGG, the aggregate bond index, it's flat.
Yep.
So a lot of clients might be scared, like, oh my God, I'm down X amount of percent. And that's the other thing. So when I take a look at a balanced portfolio that I'm talking to with clients, most clients are down 4 to 8%, depending on what's going on. So watching TV versus what's really happening in your portfolio is two different things.
Yep.
So again, not every client's built the same. I don't want to say, hey, you could be down more, you could be down less, but that's the typical client that I'm seeing right now. And when you got a market that's down 15 or 16% for year to date, because I'll look at year to date numbers, being down mid-single digits is a victory. And it's, bonds are doing what they're supposed to be doing, at least for right now.
Yep.
So, and honestly, in some of our actively managed strategies, we sold some bonds to free up cash for buying opportunities, and that's playing out to be very good for us and our clients right now, because we're not taking as bond yields go up, the asset goes down. So we're not partaking in that. So that's nice.
Yep. Look, no one wants to lose money. No one wants the market to go down. My portfolio is not doing well. I'm in a lot of growthier names. But at the same time, we have the recent memory of COVID and how quickly that snapped back around. What we do have to keep in mind, ultimately, this could be a turning point for the whole country. Some people like Trump, some people don't. But what we're fighting has been going on for 40 years, really. Yeah. The offshoring of everything to China. I saw a clip of Mr. Wonderful on CNN last night. It was like a 3-minute tirade against the Chinese government. They lie, they cheat, they steal. They're not good to deal with, et cetera, et cetera. And because we offshored so much to them and we gave them so much, and then they can just ship in stuff from Temu directly to us now, that has changed our economy and our way of life. So to reset that, it's not going to be a simple, short process. Like I said,
I mean, that's why Apple's down 30%.
Yeah.
Holy cow, man! Like I never really knew the number, but 90% of their stuff is made in China.
Yep.
Woof. I think they said, like, if you're paying $1,000 for an iPhone, be prepared to pay $2,000 to $3,000 now for an iPhone.
Yep.
So if you need an iPhone and you're on the fence, this is the time to get off the fence.
For sure. Get one of those that came over in the plane yesterday.
It's I saw something on Twitter. There was like a 61-year-old person that had a bunch of likes, and I'm like, that's kind of like, hey, my 401k is down 25% year to date, and I'm 61 years old. How am I supposed to retire? And I saw like a bunch of likes, so I had to start. And there was like 500 comments. I'm like, I got to start reading this because I have my 2 cents. Mm-hmm. And somebody just nailed it on the head. They're like, what in the hell are you invested in at 61 years old? And you thought you were ready to retire. I'm sure. Yeah, I'm sure you made a lot of money the last 2 years, but you never deleveraged. You never, righted the ship a little bit and took some chips off the table. Now you're getting your teeth kicked in.
Yeah.
So again, there's greed. What's that old saying, like something about pigs get slaughtered. Or something. God dang it. I shouldn't even brought that up. But anyway, so
yeah,
it's about having a balanced portfolio right now.
Sure.
Being prepared. I always tell our clients, I'm like, hey, we might not be as high as the market, but our goal is not to be as low.
Yep.
So
Mark Tepper here from SWP Investment Management. It's time to elevate your portfolio with the SWP Growth and Income ETF. A diversified basket of high-quality growth companies that pay dividends, SWP stands out from the pack because total returns matter. Don't just invest, thrive with SWP. Visit investswp.com for more information. Disclosures apply.
All right, let's transition into this Masters
week. Yeah, it should be the best week of the year, honestly. So this market turmoil is kind of spoiling that.
All right, give me one favorite, and then we'll go ahead with finish that. But like one favorite, and then like one kind of middle of the road, like no one might know about.
Did you happen to watch the Netflix show about the golfers?
Am I a bad person if I don't have Netflix?
Well, I just canceled Netflix actually.
Okay.
But At Full Swing is what it's called.
Yeah.
It's an amazing series if you've never watched it. But that's my last. I haven't watched too much golf. The last episode of that.
What is it about?
It follows the PGA Tour players, so it's like
all
JT.
of them, like no one in particular.
It's JT. It's a list. Yeah.
Oh, okay.
Mm-hmm.
Okay. Cool.
Rory.
Yep.
So like the Bryson's in it. All the top players are in it. This year was obviously about last year, so Rory talking about the Pinehurst and the U.S. Open choke job. But yeah, I just wanted to see if you had seen it because the last episode I cried like a baby through the entire thing. Basically, it was about a golfer who lost a child. It was just it was so sad, but so uplifting at the same time. So if you haven't seen that one, check it out. It's a great series. But that was a long way to get to. There are not that many people I don't think that can win the Masters.
I know.
So
of the top 10, who do you like this week?
It's there's really no one playing well. Like Colin Morikawa is the third choice at 20-1. He's been playing
He's 20-1
Yep.
On the third choice, because I know it's Scheffler and Rory at the top. But anyway, regardless.
I'm sorry, that's to win. 14-1.
14, yeah.
That was first round, 20-1.
Yeah.
Bryson,
Yeah.
hasn't done anything, doesn't play any real events. He's 16-1. He's the fifth choice. So yeah, it feels like really only Scotty Scheffler or Rory McIlroy and possibly Bryson. I think those are really the three favorites, and I think it's a pretty good chance that all three of those guys are in contention.
Yeah, I saw this crazy thing on Twitter, and it was, I love reading all these like daily fantasy and stats and stuff, and they had some crazy stat like over the last 6 or 7 years, anyone that has finished in the top 10 of the previous year's Masters, like their average finish was like 30th.
Yep.
It was this thing. So what I did is I took this list of like they said, and then also one of the other things is that I think there's this running stat of like 40 years in a row where the winner of the Masters has already won a tournament walking into the Masters this year. Okay. So with that being said, I took all the winners for this year, and then I started eliminating all the ones that were in the top 10. And of the top horses, all of them actually, Rory did not finish in the top 10 last year, but he's won this year. So he's my pick. I hate Rory, and you know what? Rory's been, excuse my French, but he's such a, I always thought he was such a prick.
Yeah.
It's kind of like Bryson DeChambeau. Like, just this, he just never came off nice, cool, friendly, and something with both of those golfers, DeChambeau and Rory, they've changed. They just seem more likable and nicer, and so like I'm on the Rory bandwagon. That's where I'm at, and I even threw some money on him to win.
Yeah, that would be a good story.
Win and win the first round too.
Yeah. So yeah, I will just to be different. I think it's basically only two favorites and then everybody else. So I'll take the other one. I'll take Scotty.
Okay.
The other names I will give you. I'll give you two. I would Justin Thomas. I watched some of that indoor golf. He's been around the leaderboards on some of the events too. I like Justin Thomas too. Top. If you're betting DraftKings, top 5. I like him top 5, but I think he'll have a chance to win. I also think Phil Mickelson could make some noise.
Say he's playing well.
Yep. So just knowing your way around that course is half the battle there.
Yeah.
So
that's why I still kind of am intrigued by like Patrick Reed, Phil, right? But another golfer that's been playing really well lately and is Henley.
Yep.
Henley's like somewhere in the middle of the pack, like 30 or 50-1, and I like him. I think he's going to be a kind of a favorite for daily fantasy sports and stuff. But like, dude's playing good ball striking right now. Corey Connors is also a good ball striker. So all these guys need is some. And they also say like putting is equalized there. The greens are so fast and so undulated that good putting is good, but like you actually got to get lucky for some of these putts to drop.
Yep.
So I'm going to go with Rory, and then kind of that outside of the top favorites, Henley.
Nice. I like it. Yeah, it's I hope Dustin Johnson and Brooks Koepka do something because they were two of my favorite golfers, and they went to LIV, and they just obviously Brooks won, I think, in the first year of LIV, but they've just fallen off. They're not competitive, and that's sad because I think they're two of the best.
They don't need to. They got paid already.
Oh yeah,
they don't need to do John Rahm's playing very well, but the live thing kind of throws me off because I'm like, how competitive are these guys? Could it? It's not easy to win, and it's not easy to play good golf consistently. But you have John Rahm, who consistently is always in the top 10 of every live event.
Yep.
Some of these guys might win and then just fall off for a few weeks. Yep. I just don't know what the competitive nature is when they got paid to play.
Yep.
So,
and there still seems to be no end in sight for the merger or whatever they're planning between Live and PGA. So
yeah,
we will see.
All right.
So all right. Well, so yeah, hang in there. We'll be here to talk through all the market turmoil. Hopefully, we get some better news next week. If you guys keep those show ideas coming at info@swpconnect.com. And we'll talk to you next week.
The opinions expressed in this podcast are for general information purposes only and are not intended to provide specific advice or recommendations for any investments, legal, financial, or even tax strategies. It is only intended to provide education about the financial industry, so please consult a qualified professional about your individual needs.